This video shows the essence of management accounting. Accounting consists of two areas, financial accounting and management accounting. Financial accounting must be applied to register the company's economic activity to identify its profit, costs, assets, and debt. On the other hand, management accounting can be applied to facilitate decision-making on profit planning, cost management, and so on. In other words, management accounting facilitates to identify measures to increase the company's profit. Therefore, business consultants should know well management accounting. One of the important contents of management accounting is break-even point analysis, which can facilitate profit planning. The break-even point (BEP) represents the sales amount that is required to cover total cost, consisting of both fixed and variable costs, to the company. Total profit at break-even point is zero. In this sense, the company should ensure the sales amount beyond break-even point (BEP) to continue its operation. Let's think of a case. Supposing that the company's current monthly sales amount is 100,000 bulls, monthly raw material cost is 30,000 bulls, hiring cost for temporary worker is 20,000 bulls, hiring cost for steady worker is 10,000 bulls, equipment purchase cost per lifetime period month is 10,000 bulls, workplace rental cost is 8,000 bulls, and other fixed cost is 2,000 bulls. Total variable cost should be 50,000 bulls, and total fixed cost shall be 30,000 bulls. Because raw material costs and hiring costs for temporary workers can vary according to production and sales volume, while steady worker hiring costs and workplace rental costs can maintain same amount regardless of the production and sales volume. In this case, how much is break-even point sales amount, and how much sales amount is required when targeted monthly profit is 30,000 bulls? Break-even point can be calculated by fixed cost divided by contribution margin ratio. Contribution margin can be defined as sales minus variable cost. In the case presented in the previous slide, contribution margin ratio can be calculated as 50%. Therefore, the company's break-even point sales amount shall be 60,000 bulls. If the company wants to get 30,000 bulls as targeted monthly profit, the company should sell 120,000 bulls. In such a way, break-even point analysis can be applied to identify necessary sales amount required by targeted profit. In this sense, break-even point analysis is an important base for profit planning. Now, let's consider profit planning for each of the different industry types. Generally speaking, in wood processing industry, raw material cost represents the biggest portion of its production cost. On the other hand, in metal processing companies that are highly equipped, equipment investment costs can represent the biggest portion of its production cost. In such a way, cost structure can vary according to the industry types. Therefore, profit planning should be carried out considering such cost structure. Let's think of the company which is highly equipped, as machine purchase cost represents the biggest portion of the production cost. Improving the efficiency of using machine is an important measure to increase the profits in this type of industry. If the company increases the production volume by using more of the equipment, the production cost can be decreased drastically. First, it is important to analyze how to receive enough volume of order from regular clients to use the equipment more efficiently. Sales price should be set appropriately according to the ordered volume. Second, it is important to increase the efficiency of the use of equipment when the company can receive enough volume ordered. Now, let's think of another company's case in which raw material cost represents the biggest portion of the production cost. Even though the company increased the production volume, the production cost cannot be decreased drastically. In this case, first, it is important to analyze how to decrease raw material waste. Second, it is important to analyze the possibility of replacing raw material with those that are less expensive. Third, it is important to analyze the possibility to develop new products which can be sold at a higher price. In this way, it is important to consider cost structure of each industry type to carry out profit planning appropriately. Before finalizing this video, cost calculation should be referred. Cost calculation is important for setting targeted costs and appropriate sales price according to customer's order volume. In this sense, cost calculation is one of the important topics in management accounting. However, many enterprises have not applied it because a lot of business owners consider that costing is technically difficult and complicated. But it is important to mention that cost estimate can be simplified by applying only one or two cost drivers by considering cost structure characterized by each of different industries. This video has presented the essence of management accounting. It is recommendable that business consultant candidates learn the details by reading the education material developed by BDS projects and the others.